Welcome to AM Best Audio.
I'm Lori Churtis for AM Best TV, and we're at the Global Insurance Forum in Miami. Joining us now is Mick Moloney. He's a partner and the global head of the insurance, asset management, and actuarial practices at Oliver Wyman. Mick, so great to see you. Thank you so much for joining us.
Pleasure. Delighted to be here.
Mick, you'll be presenting here today on a CEO panel on illuminating the path of insurance innovation. Can you tell us a little bit about the message that you'll be sharing?
Sure. Yeah, we have a great panel with four CEOs that I think span property and casualty, a little bit of life, less so asset management. And the themes we're really talking about are innovation in the insurance sector. My suspicion is we'll spend a lot of time talking about exactly how kind of larger enterprises should innovate, whether the sector is innovating fast enough, how it can move faster, where the particular bright spots might be. And like I say, the panel consists of very large organizations like Swiss Re and some smaller organizations like HCI, which is a specialist kind of Florida writer. So I'm sure we'll have a good and rich discussion.
Wonderful. Looking at life insurance, how has the rise of the asset management-led insurance model in life insurance shifted the traditional roles of insurers and asset managers?
Yeah, well, as you probably know, I think if there's a single biggest theme that I see playing out in insurance currently, it is this one. It is the kind of change being catalyzed in life and asset management by the private capital-backed life insurers in particular. I would say, it has catalyzed change in a lot of ways. The model itself has been responsible, I think, for a majority of the capital flowing into the life space over the course of the last 10 years, depending on how you count it. The private capital-backed players are now accounting for a majority of new business flow in spread business. They're also extremely active on closed block transactions. And as a result, the incumbents have been mobilizing pretty quickly recently to change their own business models, to put a much bigger emphasis on third-party asset management, to think carefully about the capabilities that they have around private credit and private credit origination and structuring, to think about whether they should be buying additional capabilities or partnering for them, and really then changing their ambitions around those businesses internally, and also changing the messages that they have in terms of how they communicate with shareholders in the outside world about how they want to grow those businesses going forward. At the same time, the private capital bank players themselves have continued to grow very quickly. And I would say one of the challenges the incumbents have is that they are not yet rated for the kind of growth that the private capital players have seen. If you take a typical private capital player is trading at a forward price earnings multiple in the mid-20s, a traditional life carrier is still in the 8, 9s, 10s. So their ability, in particular, the incumbents' ability to acquire things with their currency trading where it is still a bit difficult. I think the challenge for the next 4 or 5 years for the industry is to prove to shareholders that they can grow this part of their business kind of faster than they have been historically, and look for that re-rating.
What are the key advantages of integrating asset management capabilities into life insurance operations, and how does this model improve capital efficiency?
I would say, particularly when it comes to life, as you know, a lot of the liabilities that are being written by life carriers are very long dated. So they are 8, 10 plus year duration liabilities. They're illiquid in that, a lot of them can't be surrendered, aren't exposed to a lot of behavioral risk. So, you can think of it from a private capital standpoint as being permanent capital, at least, permanent over a relatively long time horizon. The efficiency then comes in being able to say, look, if I have access to such long dated liabilities, can I take that and turn it to my advantage as I look to fund, debt in some part of the landscape? Where that debt has been particularly efficient has been in places where banks are retreating from the space. You think about kind of middle market lending, you think about asset-backed finance, you think about various other things. And the efficiency then comes in saying, look, there are less well-served segments in demand where I can supply capital from this balance sheet I can pass some of the incremental spread that I think I will earn through to pricing for policyholders, which is obviously good for them. I can, compete more effectively in the markets that I want to. And at the same time, I can use the capital funding source to accelerate growth in my broader asset management business. So it has been a particularly efficient mechanism for growing spread and fee earnings in the landscape, I would say, and we're expecting to see that continue.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
How is private capital influencing the restructuring of life insurance companies, particularly in terms of mergers, acquisitions, and portfolio optimization?
Yeah, we've seen a lot of activity around restructuring driven by private capital. First of all, a lot of the private capital players themselves have acquired balance sheets. So think of Athene, Apollo probably as the oldest example, KKR, Global Atlantic, Carlyle, Fortitude, Ares have a balance sheet. So a lot of the private capital players either fully own or are minority investors in balance sheet themselves, which has been some restructuring. But probably the other kind of large piece of the restructuring that isn't always as obvious is really in terms of the reinsurance transactions that are occurring with these vehicles. And we've seen, a wave of those occur in the US as some of the incumbents look to manage their in-forces better and offload liabilities they're no longer kind of considered core. We've seen a very big wave of liabilities moving to Bermuda, for example, kind of through that. We've seen growing attention to Europe and a lot of attention growing to Japan in particular, where, again, there are kind of big volumes of long-dated liabilities. So we've seen, a groundswell, I would say, in M&A activity over the course of the last, 4 or 5 years, and no sign of that slowing down.
In what ways does the asset management-led model allow life insurers to better align their investment strategies with the long-term needs of their policyholders?
I would say it allows them to source assets that are a good match for the liabilities that they're raising, allows them to pass some of that incremental benefit through to the policyholders. Also allows them in places where they have the asset manager in places to source third-party capital, which means then that they have really, multiple tools in their arsenal in terms of an ability to serve people who want to raise debt, either partially through the balance sheet with their own capital behind it, with sidecar balance sheets where it's their partial capital, or indeed, just through charging fees into asset management. So I would say it has been, a useful tool and a tool of increasing significance if you look at across the whole landscape.
How are life insurers using private capital to enhance their ability to innovate and offer more customized insurance products to meet customers' evolving needs?
Yeah, I would say, again, it's been a bit of an evolution there in that the first place that capital has gone after in the landscape is really for spread businesses such as pension risk transfer and retail annuities. We're now seeing, I would say, a second or third wave occur where the private capital players and the incumbents are becoming more interested in things like drawdown solutions in 401k plans, but also, opportunities for deployment of that same skill set globally. So Australia is getting kind of some attention on that front. And if you look at some of the messaging that they're beginning to pivot toward, it's really around, we want to be global retirement players, and we want to think about how we can be helpful as we see the kind of global population aging in terms of de-risking retirement for consumers. So we have yet to see any, big innovations in that space. But I'm confident that with the degree of attention that's beginning to pivot, that we will as we go forward.
How is Oliver Wyman working with insurers to adapt their asset management business models in response to the declining market share of insurer-controlled asset managers? And what new strategies can help optimize capital efficiency and third-party business growth?
Yeah, we're I would say extremely active across lots of elements of the space. So we're if I think of our management consulting business, we're advising carriers as they think about their strategy going forward, in particular those with third-party asset management businesses that they're interested in accelerating, helping them to think about where the best points of integration between the balance sheet and the asset manager are going forward, helping them think about the capabilities that they have and where they'll need to increase that, helping them think about this question of what it means to have an at-scale capability relative to some of the private credit players in particular. We're very active as well on the transaction front in terms of buy and sell side actuarial due diligence on the assets that are trading. We have a very big footprint in setting up and operating Bermuda sidecars that are a big feature of this model. Then, in terms of advising on the functional changes that need to operate in terms of making sure that I have an internal environment that can move very quickly as the external environment speeds up. I would say the area of kind of finance and actuarial transformation in particular is a very big area of activity for us currently. So it's causing a lot of change. Most aspects of that change we have some role in, and we're very happy to be able to help clients.
Mick, it's been a pleasure. Thank you so much for taking the time to speak with us.
Thank you very much.
For AM Best TV in Miami, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.